All right. In the comment section, please let me know if you can hear me very well. As we proceed with today's class, I would be talking about Fibonacci. Excuse me. Hope you can hear me well. Awesome. All right, so we will be considering Fibonacci today. And then the whole idea is to be sure that we can be able to, because there's no single way to judge the market. And then the more we have diverse informations to work with, the better the result of the trade at the end of the day. That's why I would always from time to time emphasize the need for a confluence before you actually take a trade. Trend line is very great, but you can't just say because okay this is what trend line is saying, and then you go ahead to either do a buy or a sell. Of course, yes, it doesn't mean you're going to be wrong, but you want to be more precise when you are jumping on a trade. No one is interested in eating stop loss from time to time. Of course, that's not to say you're not going to eat stop loss, but it's still better than you going on a losing streak and then uncontrollably losing. All right, so I'm going to use EuroCard for this lesson, and then the Fibonacci tool, based on your previous knowledge of mathematics. I'm sure the word Fibonacci may not be entirely new to you, and then this is how we're going to see the application, and then we're going to see the zones that are of utmost importance. Have this noted always that when we're talking about Fibonacci, the important zones to us, we have the 38.2, we have the 50.0 or the 50% zone, then we have the 61.8. These are 61.8, sorry. These three zones are referred to as the PRZ zones. That is your price reversal zones. They are the strong Fibonacci regions that are of utmost importance when we are trading. All right, so this is it. When you're using Fibonacci, you're trying to use the past, as it is with trading generally. We believe that what has happened before, history would always repeat itself. So we believe strongly that, okay, since history is going to repeat itself, but you are just ensuring that you're on the good side of history. You want to make sure that you're on the winning side and not on the losing side. So we're using the previous result to be able to judge the present result. That's all we're doing. We're using the previous results to be able to judge the present result, or what is to show for. All right. One thing will be very, 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 very important when you're using your Fibonacci is called the period separator. Period separator. There's a way you can always bring it in right from your insert. Yeah, you can always look for it and then bring it on. But I love to use the short form to just bring it on. Control Y. Once you use Control Y on any time frame, you are automatically going to have your period separator. These lines that you can see right here, these lines, this is your period separator. They come up immediately once you these lines you can see, these lines you can see, these lines you can see. This is your period separator. All right. So if you are on the H4, what your period separator is actually telling you is what? It's showing you, like, each period here depicts the activity from an entire week, for an entire week. That is from when trade opened last week to when trade closed last week. This is it right here. And then you are using this, you'll use this period where I am right now, this period where you have my cursor right now, to judge this period. And then you will use this period to judge this period. So this period judge this, this will judge this, and this will judge. This is a new week that is opening now. And then we're going to be at least using the Fibonacci to try and show what to expect for the week. All right, I'm looking for my pen. Okay, just a second. Okay, good. All right. If you're on the daily, your fib levels, each of this period shows you a quarter. Each of this period shows you a quarter. Are you getting it? So it's quite, it still doesn't mean it's irrelevant when we're considering Fibonacci, but since you are most likely a day trader like myself, trying to open and then just sight opportunities between a short period of time, so that's why we'll be sticking with that of H4, using the Fibonacci below these zones, below H4, maybe giving you informations that are not, what would I put it? The PRZ zones on your lesser time frames may not give you what you actually need as a day trader. The information may not hold, quite strongly when you are going below H4. And then going above H4 also, it's already showing that what you're trying to trade for a longer time frame. So always best to stick with what your H4 is, your day trading. Right here is your Fibonacci, and then you can see it. If it's not popping up on your own MetaTrader 4, come to insert, and then you're going to find it right here, Fibonacci. So you have the Fibonacci retracements. That's what we need. The time zones, of course, you can launch that, like I said, or also called your period separator. But I prefer to use Control Y to do that always. Okay, without wasting too much of time, first thing you need to do is what you need to identify the trend. And if you have watched the previous classes where we talk about market structure, where we identified how to know, okay, is this a downward trend? Is this an upward trend? Is the market going up? Is the market going down? Or we are in a consolidation? So once you're able to discover or identify the trend of the market in that particular period, that's the first thing to join a very good fib that you are intending to use to predict. Now, it's clear here we are having downtrends, right? This is clear downtrends. You have, this is a high, this is lower high, this is a lower high. So once you have two lower highs already, it shows that you have what? A downtrend. And also right here, you can even see right here, this is more like the peak zone. And then you're going to draw, if you're in a downtrend, you draw your fib zone from the tip of the week of, the particular period you're judging to the lowest point in that particular period that you are judging. So it's referred to as what the swing high and then the swing low. But don't forget, if you are in a downtrend, you drag from top down. If you're in an upward trend, you drag from bottom up. Top to the bottom if you're in a downtrend, and then bottom up. So if you are in a downtrend, your 100.0 would always be at the top, and then your 0.0 will be at the bottom. If you are using a fib, your fib, if you don't have all these other extensions that I've added to mine already, not to worry. There's a simple way to do that. Once you double click on this is the fib line. This dotted red line, that's the important line. Once you double click on it, and then you have these dots being able to come up, these dots right here, that means it's fit to be edited. that means it's fit to be edited. Once you have that come up, that means you are ready to edit it. Then you only do what? You right click, and then you have the Fibo properties coming up, and then you can come here, just click on hard. The extension zones to hard, I'm going to give it to you, but let me just quickly finish up this class so I don't take too much of time. All right, I'm going to give you, but just quickly follow this through. All right. Okay, then don't forget, always better to not trade against the trend. If you are trading against the trend, what are you trying to do? You're only looking out for retracements, and then you're trying to scalp in between. So it's always better to always go with the major trend. So if the market is predicting itself, it's usually better to go. You are making a better choice every time you are selling a selling market. And then if you're making a buying market, if you are trying to buy in a selling market, you should be doing that for a very short space of time, because you don't actually control the market. No one does. All right. So with this now, what you do is to first mark out all the levels. You'll be doing more good to yourself. You first mark out all the levels, and don't forget, we're trying to use this is the past to judge this particular week, so you could see your entry points. And then after doing this, I'm going to use this week to be able to try and predict what we should expect in this new week that we are in right here. All right. As much as possible, you need to try and be accurate in positioning your lines. Okay, good. The PRZ zones of utmost importance, that's your 50%, 38.2, and then 61.8. All right, so having marked these zones, what you're trying to do when price gets to any of these PRZ zones is to be able to look out for price action before you then go ahead to place your sell or a buy. You don't just say, oh, it's in a sell trend, and then price has gotten to my PRZ zones. If you have tried that here, like you are looking at, this is a very bullish momentum. Look at the strong bullish candles that are forming on H4. This tells you of the potency of buyers, even though it's a sell market. Even though it's a sell trend, you are not just going to hop in and say, oh, is at 38.2 price reversal zone, or at 50% price reversal zone, or a 61.8 price reversal zone. Then it means I'm just going to go ahead and make my sell or a buy. No. As much as possible, for those who are scalping, if you are trying to buy in a downward trend and then you saw a very heavy buy activity as strong as this on H4, of course, all you just want to do is to quickly buy. That's a good scalp opportunity. That's a very, very good scalp opportunity. But I'm not going to go into that. I'm going to just focus on how you can use the FIB to follow the actual trend that you are interested in, the major trend of the day. Now, listen to me. I had said that what you use your FIB, you draw your FIB on H4, doesn't mean that you take your trades on H4. You go to lower time frame for quick entries, for you to enter at a very good zone, not leaving too much money on the table. You can go into enter at your lower time frames, having understood what's it called, price action, and how candlesticks, having mastered how to be able to interpret candlesticks to a good extent. You can go in at lower candlesticks at lower time frames to make your entry choices. Now look at this. This would have been a better way to play. Once this is a sell market, we're sure it's a sell market, and price got to 38.2 with a very strong bullish candlestick, right? All you do is you still hold on. You are not going to ignite your sell yet. Now, crossing the 50.0 level, look at it. This candle closed entirely above, over 50% of this bullish candle still closed above the 50.0. You still can't initiate your trade at this point yet. Again, price went on to close way above the 61.8, getting to there are other zones, there are other zones which are also important, but not as important as the PRC zone that I've mentioned above, mentioned earlier. So look at it again. Price got to this zone, and then you started having a week. This is a sell week now, showing you that though the price got to this height, sellers had their way. They pushed down the price. Then price came, tried to retest 61.8, and even after retesting, still tried and still pushed way above. Now, all these zones that you have right here, for me as a person, I begin to consider a reversal, because we're yet to have a strong reversal indication in all these zones. Though we've started having the weeks, the weeks are important in themselves, right? But that's not all. We started having the weeks, right? They're important, but still, that's not going to be a reason for you to go ahead and make your sell or a buy. But you start paying attention from when the candle starts showing, when the market starts giving you wicks, because that already shows that there is, the market is beginning to, there's already a push in the price. And then look at the wicks coming. The wicks is coming as a result of selling activities. All the wicks here are as a result of sell activities. This is as a result of sellers activities pushing the price down. They push the price down. So from this zone, you start having this is a lower high, right? This candle closed below the body of this candle, right? This candle closed below this. Let me use this so I can. This particular candle closed below this candle, and this closed below it. And then look at this again. The body of this candle still closed below the body of this candle. This is already telling you that you are beginning to have some, like the buying strength is reducing already. And don't forget, we are still on H4. The buying strength is already showing you that the buyer strength is already reducing. But look at this zone. This is a very, very, very important area that you have to pay attention to. And then at this point, we started having what? Excuse me. Oh my God. I'll need to zoom that in again. Okay, so at this zone, this particular zone here, we had very, very good reversal indications. This is a doji candle formed here. We can't even, the wick, is so tiny that it's almost negligible. I think it's already hidden by one of the lines here. And then this itself is a reversal candle. This is another reversal candle. This then shows you that what's it called? The buyers are now, they are very, very tired in this market. And then you can begin to pay attention for for your selling activities. And then this engulfing candlestick came in to confirm that yes, it's now time for sellers activity. All right, now look at how the FIB would have been able to help you if you paid good attention to FIB, and then you can be able to maximize this FIB zone. All right, so having had this strong sell indication, in fact, having had the very strong sell indication here, you can see that even on H1, no candlestick came to close above our FIB zone any longer. Like, understand the body, understand the wick. When you're considering a candlestick, the body is much more important than the wick. It doesn't mean the wicks are negligible, but look at this on our 61.8 zone. You have all the candlesticks forming. They were forming, below the 61.8 zone. All the candlesticks forming here, they're forming below. So this is a good time now to take your trade, because it is confirmed that what sellers they've come over to dominate the market, because it was their market in the first place. It was the sellers market. If you go still on a lower candlestick time frame, this is where we're trying to judge. Because you still need to look out for, okay, good. This was where let me take this out. This was where price broke through. This was where price broke through, into the 61.8 zone, right? Is that the right place? Let me be sure. I wish I could manipulate the screen way better than this. All right, but this is the zone I'm trying to refer to here. If I go bigger, you could see how price came here, broke the zone, and then retested the zone, but the body of the candlestick, even on your M15, all the candlesticks forming couldn't have their body closing above your 61.8 anymore. This already shows you that what the sellers have come to dominate this market. And then for clarity, if you were trading this now, this is where, if you have to put your stop loss, this is why I said there are still some other zones that are of good importance, but they are not as significant as your actual price reversal zones. So if I'm to take this trade, if I pull my sell trigger from here, my stop loss is going to be just above this 70.6. 70.6 is also a good zone. You can add it to your fee. So you have you're taking a risk of about 12 pips, and then look at the potential. The potential result is quite higher, and then more significant than the loss that you could have incurred on trying to. So this is a kind of more like, because if you are going in by the principles of a trend line, let me try and draw a trend line to show. So if you were going by the trend line, by our principles of trend line and the lessons of trend line, we know that we don't pick trades in the middle, right? If you have missed picking the trend from this point, it's a gone trend by the principles of trend line. But when you now had your fib level to your trend line, now you are using two informations, adding candlesticks again. You are using three informations to be able to make a sell or a buy decision, which is, when you are trading with a confluence, you usually get more result as compared to just trying to use one particular indicator to try and make a buy or a sell decision. So look at this now with your fib level. Then you can, if you are now interested in adding more positions, by the time price this gets to your 50.0, and you are still see the sellers activity still very, very strong. Look at the body of this candle. This is started creating lower lows from this point. This is a low, right? If you take this is a low, and this is lower. We start having lower lows all the way, and then I'm using the body, and look at this candle. Though we had more like a reversal candle here, buying activity, but the body could not close beyond the body of the sell candle. That still shows you that it's still a seller's market. This is another opportunity for you to make another entry once you discover that you have, and then you have what's it called? Another excuse me. You have another bullish candle, bearish candle rather, to confirm that the bear trend is still holding. And then not just the fact that the bear trend is holding, it's also on a strong fib level, right? This happened again on 50.0. These are key levels. And then if you are trading this, as you're coming down here, of course, once this trade gets to this point, you should have moved your stop loss at least to your entry here, so that you are running a risk-free trade, and that might be able to help you to then open another position and or thereabout. That's if you're interested in that. But if you are not, you keep moving your stop loss to ensure that you're able to maximize. And then now at your 38.2, this is more like the strongest price reversal zone. Your 38.2 is actually very, very strong. You could see how price reacted to that zone. Though it broke to 23.6, price came to retest the zone. But this is an indecision candle. An indecision candle, of course, you just have to wait for it to give whatever information it wants to give afterwards. But at least you would have been able to secure good. This is if you had traded this to just this point alone, to your 28.3, 28.6 rather, you have made about 83 pips, on this particular trade. And then you could see how price still reacted. And then, for the week, this was the lowest point for the week. It was about 135 pips generally, So this is how your fib levels can be used, in trying to predict what we should expect in the market, Now, I'm going to clear this now, and then try to use that particular information I'm going to try to use that information to judge what we should be having for new week. You can as well, just ensure you practice. The more you practice, the more of these opportunities you're able to cite, the more you're able to get accustomed to these tools, to the market itself. All right. My period separator is the first thing. Never forget that, your period separator first. And then since from what we had a very, very good sell. It still shows that what is a seller's market. So you drag from top to the bottom, and then never forget what I said. This is where the week closed. I mean, that's a swing low rather for the week. Swing low for the week. That's the lowest point. So up and again, what do you do? The first thing you do is what? You mark your. And then there's something I learned. I didn't read it in a book. I've read several books and watched a lot of videos of people who trained on FIB. But there's something I've seen from my own personal experience. There are Fibonacci extensions. That's your minus 127 minus. When I mark my charts, like you will see on some of my charts, I make sure I mark them also. And then I'll use a different color for my trend, for the line that I'm using to mark them out. You can see this. I had marked this one. This is minus. It should be minus something. It should be either at the top or at the bottom. Let me know. Let me not confuse you. But just understand, when you're adding your fib extension zones, there are some extension zones that are important. You need to mark them, and I try to use a different color from the line that I'm currently using. Why? Because they are also important. That's how you can know what extent should I put my TP for this particular trade. Where should I put my stop loss for this particular movement? Very, very, very important. All right, so I'll go ahead to mark my PRZ zones. They are very, very important. And then even after marking them, you can just go ahead and delete your fib if you don't want your chart to look too complicated for you to interpret and understand. All right, so this is a sell market, but of course, it doesn't mean that what you're going to just stick to it and then be saying, okay, sell, sell, sell. Even when the market is showing you that what I'm no longer in for a sell, and then you're saying, no, 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 you're a sell market. None of us actually controls the market. And then if I'm still going to go by, excuse me, I'm trying to see the overall structure of the market so I can know what's happening. To what point should we start having a rejection of the sell? Maybe there's a trend here, right? Looking like there's a trend line here. Looks like there's a trend here, but notwithstanding, always put that into consideration anyway, so that you can actually know when is this particular trend I'm following, when does it get exhausted. But then we're trading based on the principle of what? Of Fibonacci. So this is what to do. You don't take a trade. You don't take a trade, either a buy or a sell. If you are following Fib strictly, you don't take a trade until price gets to your what? To your important zones, your PRZ zones. That's your 61.8, your 50.0, or your 38.2. You don't take a trade until price gets to what? Your PRZ zones, because those are the important zones that you have to watch, because you are trying to trade based on the principle of what? Fibonacci. So if you are trading with other principles, or you have marked out your chart and you are not using the period separator of the weekly like I'm using here, if you are using Fib on another basis, not on this basis for which I'm sharing this information, you don't take a sell or a buy until price gets to this zone, to these zones. And when price gets to that zone, what do? You watch out for what? For the information that the candlesticks is giving to you. You watch out for the informations you are getting from what? The candlesticks. Look at this zone right here. Price came way below 0.0, but look at it. The body of this candlesticks presently is closing above this what's it called? These candles. I mean this 0.0 line. You can see that this is quite clear. Price came here with, let's interpret the candlesticks that brought the price down to these zones. At least we can't be wrong. Let's take about 10 candlesticks back and then try to see. We're on H4, no doubt. So one, this candlestick is still forming. We can't judge it yet. Let me put my time. Okay, good. So this candlestick has about 26 minutes to go. Yeah, we're not going to try to, whatever we're doing, we're just going to try and assume that the candlestick has closed. But we're not going to take any trade here because we're on 0.0. Those who want to scalp are those who will start looking for, okay, can I quickly buy to this point? Can I, but if you are waiting, you're not scalping, you're only trading based on the principles of Fib. I've said it over and over, just for emphasis. Don't be tempted to try and do otherwise. Wait for price to hit your PRZ zones before you go ahead and initiate your trade. So interpreting the last 10 candlesticks, some people go as far as interpreting the last 16 candlesticks because it tells a lot. So we'll go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All right. So this showed that in this particular duration, it was a seller's hour, and then they sold. You can see sellers pushed the price down, and then we have this candlestick. Look at this, is an indecision candle, but the body of this candle, though very tiny, closed below this candle. This is a lower low, right? This is a lower low. And look at this candle also. Look at where the body of this is actually closing below this candle. This is another lower low, right? Then we had this candle coming to this buy candle coming to bury the entire 3 candles. This give us a buy, like Okay, it shows that for this particular duration, buyers had the day, and then buyers still pushed the price. But this candle, look at the body. This is where this closed. This closed here, right? I mean, open here, right? Sorry, for a bullish candle. When it's bullish, price closes at the top. When it's bearish, price closes at the bottom. So let's go over that again. Yeah, it takes learning, and relearning. I still keep burying myself in trying to learn and master this thing. All right, so this closed here, and then this is the close of this particular candle. It's closing below the opening of this particular candle, right? And this opened here, closed here. So this is still a lower low. And then look at this candle coming way below. This is a lower low. This is the only up, this is the only higher, what's it called? Higher low candle that we had here. The rest have been lower lows, lower lows, lower lows. Look at this candle, still entirely below the body. It's still a lower low. This is a lower low. And then this closed, but couldn't close above the wick. It's still a lower low. Just understand that it's still a lower low. Then we have a lower low. And this is trying to show us if this candle now, for example, should close above, at least if it should close like where it is right now, it's already showing us a higher low. This is another higher low. But yet you can't still make a sell decision or a buy decision here. But looking at all these candles, you're able to tell that what you had more sales in the market. So there's still enough selling strength until we are able to signify. And then if you are intending to buy and then you are not scalping, you need to ensure that what price has closed above, and then the candlesticks forming, they started closing above these PRZ zones. In fact, as a matter of fact, if you want to buy without any risk, you have to start buying when price has closed above the 61.8 zone. When all the candlesticks forming is showing you a higher high, when you're having higher high candles, and then they are showing above, they are closing above the 61.8 zone. All right, this is the first class. I hope it doesn't, it shouldn't confuse you in any way. You can get to watch it over and over and over again. Try as much as possible to backtest this this particular strategy. It works very well with price action. You have to combine your knowledge of candlesticks with your FIB, and then of course trend line will still be of utmost importance. These are the only things I trade. I don't go beyond trying to look for any other strategy. Yeah, we may have this candle here, and then watch for a break of this trend before you can, if you can have this candle trying to close way above, not a bad thing. If you can close above, and then you have the new candle also forming above this trend, that might begin to tell you, okay, since there's a buy activity trying to come up. But yeah, this is all it is. I don't know if you've got questions or areas you quickly want me to clarify before we call it a day. Questions, or you want me to clarify anything before we call it a day? Can I go ahead and call it a day? Okay, if you've got questions, just leave a comment in the description section, and then I can unmute yourself and then let me have a question.
Okay. Based on this Fibonacci series that you've done, or the Fibonacci indicators, you said we are trying to use the previous to predict the future.
Yeah.
Right?
Yes. Please.
So, in as much as you dwelt on past indicators and past candles, how are we going to use it to predict the future? Because based on what I'm saying now, I can't still tell on whether to go for a buy or a sell right now.
All right. Yeah. Very good question. Like I said, Excuse me. Like I said, seeing after putting your Fibonacci on your chart, it doesn't mean okay immediately you're just going to go buy or sell. No. You wait for price in the course of the week to get to what your PRZ zone. When the market gets to your price reversal zones, your PRZ zones, that's when you now begin to consider, based on the candlestick or the price action you are seeing at that particular time, what should I do? I hope you're following me. Based on what you're seeing, that's when you now begin to make a choice of, okay, should I buy or should I sell? You're not just going to put your what's it called, your Fibonacci on the chart and then say, yeah, I'm buying or I'm selling. No, you're still going to watch out for what the market is saying before you go ahead to make your buy or a sell decision. All right, I'm sure that answers your question, right?
Yes, exactly. It does.
All right. In the absence of any other question, do go ahead and let me know if you watch this particular class, and then you have questions to ask. You can always reach out. Thank you very much, and then also make sure you watch Peter's lesson on Fibonacci. Also, is also going to do a lot of good to you. Thank you. Bye.